Hey there, Neil here, and welcome back to Option Theory. Today is a cherry bomb day, so welcome to the bomb squad if this is your first time. If not, you know what we're going to do. We're putting on a cherry bomb trade today, right? So we get this from the Tasty Trade email blast. Link in the description below if you want to go ahead and subscribe to that email blast to get a heads up before this video comes out what the trade will be. Okay, that's my normal sort of start. Let's get into the platform and put on today's trade. So here we see, taking a look on the left-hand custom watch list that I created here. So we can get a look at the market. Crude oil seems to be having a little bit of a comeback from yesterday. Yesterday's big drop, which worked out well for me here. The crude oil position has gone up a bit. S&P is up only 0.2%, which is, I would say a relatively normal move on any given day. You wouldn't be that shocked to see that kind of a move. Gold is down quite a bit. Right, NASDAQ is up a little more than the S&Ps. Not sure why tech's seeing a bigger sell, bigger buy right now. So, all right. With that said, that was our quick market lookout. So what we're going to be putting on today is, if you can see, we're already a little bullish here. We have quite a bit of positive delta. That's not beta weighted. I'll talk about that maybe in a how-to video for the weekend. But what we're going to be doing is adding some more deltas, some more positive deltas. We're going to be putting on a bullish position. Today's cherry bomb talks about the effect that the self-quarantining might be having on certain online shoppers. In particular, drum roll please, right? Going to the Analyze tab, take a look over here, and then the Charts tab. We're taking a look at Amazon. We can see that it's definitely for the past year, because we're on the every candle is a day, and this is a whole year. We can see here that it is at a low for the year, almost, right? There's the low. It gapped down and came back up yesterday. Let's take a look at where it was over the past 3 years, though. So for those of you technical analysis inclined people, you could say that this level here represents, some previous support right here, right? You can see sort of a line that goes through there. All right. So maybe that's it. Maybe that's enough to say, all right, I could be bullish on this. If not, how about just the probabilities, right? So what we're looking at doing in the Analyze tab under Add Simulated Trade, we're going to go over to the 31 days to expiration, monthly expiration, all right? And we're going to go down to the 1570. Ooh, that just works out with 50 strikes. So you might need to adjust the number of strikes that you have on your screen there. All right, so we're going to do a short put spread. It's going to be $10 wide. Now, that might be something that doesn't work out for you in a small account, and I totally can appreciate that. However, since we're doing simulated trading, right, you have a large enough account. Remember, I'm not a professional, and I have a disclaimer at the end of every video that if you were to do this with your real money, right, not responsible, you're a big person, you make your own decisions. So anyway, we're going to right click on the bid for this 1570 put, because that's what we're going to sell. We're going to choose Analyze Sell Trade. We're going to do vertical. All right. And we don't want the short 1570 and long 1560. That's not right. Oh, there we go. Yes, it was. We wanted this one, though. 1580. I looked at the wrong numbers. 1580, 1570. So, we all make mistakes. So, we're going to be short, my bad, the 1580 and the long, the 1570, right? This is what we're selling. We're agreeing to take it on at 1580. But if it goes below 1570, we get the right to put it back on somebody else. Maximum risk would be $1,000 minus the credit received. And you remember the Tasty Trade approach says we want to get something that's about a third of the width of the strikes. So this is pretty dang close to 1/3 the width of the strikes. So yay on mechanics. All right, let's take a look at the risk profile for this. All right, this is your typical vertical here. So let's go to set price slices to break even. at expiration. Okay, we're seeing that it's showing, of course, you got to get the right expiration plugged in there. Yeah, that's better. About a 65% chance of staying above the break even, or what, if you were using a different platform, they might call a POP, probability of profit, right? So we're here. So as long as anywhere in the next 31 days it stays above this gold line, you won't lose money. If it stays above this one, you'll make your maximum profit, which is $337 in 31 days. That's not a bad profit. Of course, your maximum risk here, should it go below this, is $663. So, well, look, our probabilities jumped a little bit. Okay, cool. So that's that. I think that's a pretty good, nice probabilities there for us. And according to your cherry bomb, it'll give you a P50. So once again, I want to motivate you to go over there and sign up to that email list. P50 is a great statistic that they give you in the Tasty Trade email blasts. So I'm going to right click on this trade. I'm going to choose confirm and send. It's going to say everything that we said before, right? 337 is our max profit, $663 is our max loss. Why are we willing to risk more than we're willing to make? Because the probabilities are in our favor, right? Why not be the house instead of the person gambling? I'm going to hit send. That's going to go into my working orders. Okay, there's one for my crude oil, and there's one for my Amazon. Cool. All right. I hope that was helpful. I hope you are getting in with us and trading these paper trades as well. And, once again, I'd love to hear any questions that you have. You can see here, I'm not an expert. I make mistakes. I'm learning along with you. And I enjoy doing that. So I look forward to seeing you in future videos.